Check off.
Yeah, of course, you're good. And gotta get this recording going. Wait for a couple of people to tune in. Here we go. All right, we got one person tuning in. Let me adjust this right here. Hey, you know you're live right now, right?
Am I?
All right, got a couple shout outs. What's up, everybody? This is just a test run with the new studio. Make sure we're the same height. All right, scoot your chair a little bit. You gotta go higher a little bit.
Okay. Hold on a second. There we go.
Don't be getting too close to me now and shit.
You're too sexy.
All right, let me log into this thing. Let's see what we got here. If you guys have any questions, go ahead and shoot out your questions. Actually, we're having some problems with the mic too as well. We wanted to use the studio mics, but the feed that's actually into the camera is not working that well. So we are just using the basics. So let me know how the audio is, guys. Let me turn this off here. Promote somebody else. Okay, look, we got some
Stacks of money. Everybody's throwing out money.
all right. If you guys have any questions regarding the housing market or financing, this is Dan French with Guarantee Rate Mortgage. He can answer any financing questions that you may have. Also, you can call in too as well. Unfortunately, we can't use my phone, but can we use your phone, Dan, or no?
Well,
or are you recording too?
Yeah, the thing about my phone is I'm recording as well. And so if you did that, I would just drop off. And we're not prepared as much as we need to be. It's kind of a test run. So, we're just going to go with the flow.
Okay. And we got cameras all over the place too as well.
I want to thank everybody tuning in today's Super Bowl.
You big ass dummy.
I know, right? Football Sunday. Tells you how much we follow it, right?
Yeah. That's true.
So anyways, a lot of people would prefer that over this, so it's kind of funny.
I hope you guys are having an awesome morning from North Las Vegas. Well, we're starting our day off, Hector. All right, let's get some questions in, guys. How many people we got on this chat right now? Well, it doesn't even say. 200?
So let's talk about, I want to ask you a couple questions. So the housing market, a lot of people are saying home affordability is there, and I just want to get your take on it. So obviously you look around and the cost to buy a home, has it leveled out in some pockets? I mean, because it seems like affordability is still, it's not bad, but it's, the average person out there buying a home, go ahead.
Well, let's take a look at this. The average household income right now is about $51,000.
Mm-hmm.
The median price point for a home is about $310,000. In 2008, the median price point for a home at that time when it peaked was about $315,000. So we're about to hit that mark. That's already 6 times the income. So the question that I want to throw back at you, because now it's 6 times the income, and also really depending on which lender that you work with. I know certain companies has like a debt to income ratio, but let's just go keep it conservative. Would you say 40% is kind of like right around there?
For debt to income ratio, yeah, it's going to pass for most, even what's called jumbo financing. But yeah, that would be the good starting point. That doesn't mean you can't get approved with compensating.
So let's take a look at this in detail. So it's already 6 times the income. Let's just say if somebody out there is working at the Strip, is making $51,000 a year, no debt, right? Mm-hmm. They have a rent, but they're looking to buy a home. What would be the average payment today for something like that?
How much is it?
Well, $315,000.
You're probably looking at about a $2,000 to $2,100 with taxes, insurance, including if you needed homeowner's insurance. Now, if it's a VA loan, it's different because you don't have home insurance on a VA loan, so it's probably going to be right around $1,900 a month.
Damn, don't this studio look tight? That should look clean.
It's better than us.
I'll be a sidetrack, guys.
I'm telling you, man, I'm taking pictures and I was like videoing it. I'm like, I'm gonna make one of these, man. I'm gonna have somebody do this.
Hey, you're such a scabber, dude.
Hey, I don't know. You got ideas. Like, I'm gonna take advantage of these ideas, man.
But going back, so we know it's already 6 times the income. You're paying about 2,000. So somebody that's making about 55 or 51,000 a year, they're probably only bringing home probably like 3,500. So what's left over is about $1,500 a month, and that has to do with food, gas, and all that stuff. So I guess by looking at that, things are getting more and more expensive. Not only from the housing perspective, but from gas, food, just everything. Inflation.
Yeah, I mean, I was reading an article about home affordability, and obviously, where do you think the highest median price for a home is? And also, you have to have the highest median wage earning.
Yeah.
Where do you think? What city do you think that's in?
Well, you tell me. I don't know.
San Francisco. All right.
Okay.
San Francisco is what, the mecca of, all of the internet and everything, really, right?
Yeah.
Okay, so San Francisco is very expensive to live in, but they have the highest. We've looked at an article that said it's gone up 4,000 for the average person out there buying a home. You would need 71,000 a year annual income.
Yeah.
And now this year, home affordability is going down, because if you look at it, it's 4,000 more. So you need to actually make more than you made the previous year to buy the same home. Mm-hmm. And it's gone up about $4,000.
And what's crazy about that is I have a lot of clients that, well, I would say probably like 99% of my clients are, out of the state or out of the country. But a lot of them are from California, and I do have a lot of people from San Francisco. And what they do is they take a look at what they can buy there versus what they can buy here, and they get 2 times more of the housing. Mm-hmm. And they also do have options. And I did read an article in San Francisco. This guy was selling a shed for like $800,000.
Yeah.
Ain't that some crazy ass shit?
Hey, speaking of San Francisco, man.
Yeah.
So they got a lot of homeless, and I'm not here to talk about the homeless, but what happened here? Did you hear about the recent news that happened here?
What happened?
So like, you could be fined and put in jail now if you're somebody that's sleeping on the sidewalk here.
Yeah, how are they going to handle that? Here's the thing, I don't even think cops are even going to deal with that, because how's the state even going to get their money anyway? Because think about this, if you're homeless and you get fined or you get jailed, I mean,
I think it's going to be more jailing. I mean,
you think so?
I think so, because the state still gets. I think the state will still get paid, because when you take somebody to jail, obviously they're still getting compensation. Mm-hmm. Now, it might be a win-win, because unfortunately some homeless just can't get it together, and I understand. Mm-hmm. They might be better off going there. They might get 3 square meals a day, and I mean, they got
lifting weights,
they get set up. Hey, I'll do it, man. You can't. Everybody's got a different path, so.
It's crazy. I actually had a client from San Francisco. He bought out here about a year ago, and he's about to retire in a couple months. And he set himself up, and he got a really beautiful property.
Yeah.
And one of the things he was saying with the homeless, like, apparently they're pretty crazy out there. Like, they be shitting on the side of the road, and there's like mosquitoes all over the place. Isn't that kind of crazy? Yeah, man, I got the app, so that way if I know where I'm going, it's like you get an app, it'll tell you where that little problem's at. You can just go right around it. I'm telling you, man, they got it. LA's got it. Oh shit.
There's a lot of comments too online. You see that it's like everybody's like, oh my God, we're gonna be turning into LA and California. And I think what we're doing here is we're learning the mistakes that California has made.
Yeah.
And there's a lot of Californians coming here, and we're not making the same mistakes. We're like, wait a second, let's take a look and see what happened over there.
Yeah.
Now we don't want that. And I think that's what's happening here, is that you're seeing a lot of people that are in place that are making decisions here for Vegas. Obviously, there's voting and things that go on, but they're passing laws and legislation to make sure that we don't have the same problems. And one of them being. And
what I noticed too, as well, is like these politicians out here. The pockets are not that deep, so you don't have too many hands in everybody's pocket. So it's not like California. So that's the good thing. I mean, just like that Raider Stadium got passed pretty quickly, right? It was like less than 18 months or something.
Yeah, but I mean, I do think, and I was reading an article about this, and I don't know for sure, but I think that it's going to be obviously a good stadium. I'm really happy about it. But who's paying for the stadium?
Oh, well, obviously we as taxpayers, we're paying a little bit more towards it, but obviously it's going to generate some sort of revenue. But the crazy thing that I always get asked, right, and I don't know if you get asked this all the time, people call me and say, hey, I want to hurry up and buy before they build a stadium. You have to understand, just because they're building a stadium, it doesn't mean the housing market is going to blow up. What's going to happen is the stadium is going to contribute towards the economics, which will build on to where the state is making more money, and they're able to take this money, because our county commissioners, they're pretty good. What they do is take the money, they put it back into our infrastructure, And what happens is people come out here, they're like, man, this is a clean place, everything's brand new, and that's how we drive more people. So it does stimulate the economy a little bit, but it plays only a small part. Remember, when it comes just to gambling alone, we generate over $10 billion in gaming revenue alone.
Right.
So, I mean, that's pretty much our primary sector. It's not going to be the stadium. So let's get that across.
Yeah, I think there's a big misconception because how many weeks are they going to be here? 8 weeks. You know,
Exactly.
that's it.
Yeah,
And
what
so
are they playing, like 8 games or something?
Yeah, they're playing 8 games. Does it mean that they're not going to drive business where you have people coming for those 8 weeks?
Yeah.
If you have an Airbnb or something along those lines that you're getting a big, you know, that could be your 8 weeks
Yeah.
of profit,
Mhm.
you know, because now you're just really just hammering out, you know, big, large weekly or even weekend costs, you know,
Yeah.
and I think that's something that people are really looking towards right now, buying that Airbnb and trying to get those properties, those investment properties. I put out a video about that too, but
Oh, did you?
well, there's a lot of stuff, man. I'm telling you, there's a lot of people that think, look, I'll tell you, there's somebody I know that is trying to buy 10 Airbnbs. And I'm like, that's smart in my opinion because, dude, check this out. This guy, literally, like this lady, I gave her a loan.
Yeah.
And this guy also, I got two examples of this. The first girl, we did the loan for her.
Yeah.
And she actually converted it into an Airbnb. She's making like $20,000 a month at that.
Oh yeah, that's our client.
Yeah, that's our client, right? And
Yeah.
but I mean, she doesn't pull in. That's not like net profit. But afterwards, it's like what, 8, 7, 8 grand.
That's a lot of money, dude.
It is. There's a lot of work,
Mhm.
and you have to put in a lot of effort. But I think that's what a lot of people are doing with the Raiders. You got the what is it? The Golden Knights.
Mhm.
We got Aces.
Yep.
You know, so we got a lot
The
of stuff going
Aviators,
on.
yeah. So yeah, talking about that Airbnb, matter of fact, today I'm going to be releasing a video where I did a video vlog on a client. He's buying an Airbnb. Well, he's already have a couple out here in Lake Las Vegas. We're buying more multiple units, so stay tuned for that. I'm going to release that today. And going back to that topic with that girl with the Airbnb, because I always get this asked all the time. Regarding Airbnb, where can I buy? The problem is with the guidelines changes on a consistent basis. Some properties are grandfathered in. You just don't want to come out here and assume that you can just create up an Airbnb. So contact the county and see what the codes are because you will get fined with Airbnb. And I think the reason why this county doesn't really like Airbnb is because Airbnb, I don't think they're paying our state, right? Well, we got some comments?
Wait, we got some questions. It says, are you going to answer questions on what we get to it? Who is that?
Oh, I'm not too sure, but hey, shoot out your questions. I know we're just kind of rambling along because that's what we do.
I'm just trying to see, you know, one of the things that, so a lot of clients that I talk to, I just want to brush over this. So it's kind of like a market rundown. And when we go through this market rundown, I want to bore everybody like, oh my God, you know, let's crunch numbers because nobody, I just want to get an idea. So if you had to do a market position of where the market's at here in Vegas, obviously it's the slow time for us right now.
Yeah.
Right? It's starting to get to that point.
Oh, you slow?
Well, I'm slow, but
Get your ass going.
I know, man. I gotta make some phone calls. Matter of fact, I gotta leave the stadium right now. I gotta go right now. Studio, I'm out. I gotta go make some calls, man. Gotta start grinding. No, but what it is I think people want to know what is really happening in Vegas. Like everybody sees like the big, okay, well, what's going on
Yeah.
globally or what's going on in our country, like you know, across the nation. But Vegas is its own. It's a roller coaster, you know.
Well, I think that's every market because the problem is that I'm getting now is that people will be listening to like CNN and Fox, you know, all that
You
shit.
listen to that too?
Yeah, I do. It is what it is. You know, I collect pieces here and there.
You got to go to the Drudge Report, dude.
Okay, or Bloomberg. however, the problem is that people just listen to the news and they associate the housing market with every housing market. You can't do that. You have to look at every single sector. Just like California, I don't know shit about California. I don't know shit about New York. I just know what's going on here in our Las Vegas Valley.
Right.
And every neighborhood is also broken down and is completely different. You may go to like Las Vegas, Summerlin, you're starting off at $198 a square foot. Then you can be in Henderson, it's at $177 a square foot. But now, depending where in Henderson, now if you're in McDonald Highlands, now you're looking at $400 a square foot. So it's really broken down.
Let me talk to this person right here. It's I don't know who this is. I don't want to pay more than $1,500 a month for mortgage. Well, hey, I'm with you.
Well, then that's going to drop the price then, right?
It'll drop the price. You know, it'll be probably like probably $175.
Yeah.
You got to realize when you're buying a home,
Yeah.
and everybody's like, well, I'm going to go and put a mortgage calculator, and there's my payment, there's my rate. That's all false. realistically, you got to look at a range
Yeah.
because there's compensating factors. But I'm not going to get into big details and bore you. But if you want to buy a home like that, you're probably looking 175, 200,000. Now, where does that put somebody if they're buying a home for a $1,500 mortgage, 175?
In Detroit.
Is that on D Street?
Well, on a serious note, at 175, what could you actually really get out there at 175? So let's take a look at this. For
Right.
a average condo right now, right, you're going to be spending about almost $190,000. Okay, that's the medium. On a townhome, you're already looking at almost like at $240,000.
Yeah.
So imagine that if your payment's going to be $1,500, right? $1,500 is 175. You're going to be limited to what's available out here. Also, depending on the location too as well. However, you may be able to find something based upon the location, because one of the things I always get asked a lot, yo, don't put me in a ghetto area. Well, I don't know what ghetto is. My ghetto may be different from your
Plus,
ghetto.
you got to adapt to the market.
Yeah, exactly.
It's not about what you want. It's about
It's
like
what's available.
what's the market giving. So we got this guy right here, George Rooney. Is there
George Clooney.
Yeah, George Clooney.
Oh shit!
All right, so he's is there a house in Vegas for $200 a month mortgage?
Oh, I wish.
Hey, you know what there is? I got a room to rent. So we could definitely get him set up.
Oh, okay.
We'll get that all set up. We'll get him involved.
Okay.
We got you.
Hey, this guy's gonna really hit you.
I just answered your question, George.
Okay, so let's see what else we have here. Can you read our comments? Yeah, we can read your comments. It's mostly all shout outs, so.
What's up, guys? So anyways, you know, I think a lot of clients want to know what is the average home right now if you want to buy a nice home. How many of your clients go for a new build?
I would say probably about 99.9% of my clients will do new builds, and the reason why is because this channel is mostly specialized in new home construction. Sure. So I do get a lot of new home builds, but I also get resales too as well. But I enjoy the new home builds just due to the fact that I enjoy specking out the homes and really walking, the consumers across.
If you're somebody out there trying to buy an existing home, okay,
Yeah.
where's that average price point that you're like, okay, you're gonna get that? Okay, what's the cookie cutter? 3-bedroom, 2-bath,
Okay.
15 to 2,000 square foot home. Where are you at? Where are you gonna be sitting at?
Let's go back to this. We talked about the median price point for a home right now, 310. What do you get? Roughly about 1,850 square feet, 3 bedrooms, 2 bathrooms, 2.
But where are you at? Like, where's the location? Is that a nice area?
That's median.
Okay.
So when I say median, so what this means is if we took a look at all the homes that were sale this month, let's say 3,000, the median would be anything below and anything above, and that's the median. But if we look at the average is about 365,000. Now, the average is basically compiled within certain locations. You take it and you divide it by the numbers of the home sales based upon the price. So there's 2 different price points that you have to take a look at. So it's really not one that's set in stone, but you're probably going to be spending about the 360 to 365. But also, depending on the location, again, now let's just say we know the median for a single family residence is 1,800 square feet. But if we looked in Summerlin right now is 198.
Why is it such a premium? Like, what is so desirable about something? Like, what?
Well,
they act like they got their own, like, city and...
But they do.
They're still in Las Vegas.
Well, I understand that. But however, think about this. You have Howard Hughes owns more than 22,000 acres of development land. Who's Howard? Man, you know who, the crazy guy?
Oh,
that locked himself in the room? That was a good movie. So let's take a look at this. There's more than 22,000 acres of development land. This is the biggest master plan community here in the Las Vegas and city of Henderson too as well. They have more than 122,000 residencies. I mean, that's a pretty big master plan community. But the question is, look, if you are just getting into an entry-level home, is it really worth it to buy a home out there that's around $450,000, $475,000 to live in a cubbyhole? For me, I would probably look elsewhere because you could take that $475,000, go out to the northwest or the southwest, and probably get more bang for your buck. But now it comes down to, is that location desirable?
Well, you're trying to live up with the Joneses, is that right?
Exactly. I don't live in Summerlin.
No, I know. But I'm just saying.
It's too bougie for me.
No, I know. It's like you go to, well, look, it's a nice area.
No, it is.
It's so desirable, though. Everybody wants Summerlin. That's all you hear about. And it's like, you got, they got the new, what is it, the town square over there?
Yeah.
Is that like, what is that called? Downtown Summerlin?
Yeah, downtown
So
Summerlin.
they got that. That's really nice, actually. It's an outdoor style mall. Really cultural, in my opinion, over there. Also, I think they got the Golden Knights practice facility over there. So it's a really nice area.
Mm-hmm.
For me, think about it. Vegas is 45 minutes every direction you want, right?
Yeah.
It's up to you. If you got the money and you want to spend, then do it. If it's something where you're trying to, well, I'm an investor, I'm looking at everything I'm doing, and I just want to watch what I spend, and it's not important, then.
I want to go back to this George Clooney guy. He goes, I hate my job because it's not allowing me to buy a home. So here's the thing. It's not about how much money you make. What you need to do is really get with a lender and first have them pull your credit and kind of see where you are at as far as your debt to income ratio. And if there's a problem, right, a lender that's good, he should be able to fix and resolve those problems. And he can also give you advice on what needs to be done. There's people that, like doctors, right, we deal with, they're making over like $500,000 a year, but their debt to income ratio is so high, they can't even buy the home that they want.
Mm-hmm.
And these are the things that you have to take a look at first. Obviously, income does play a role, but that plays a certain part. I mean, if you're only making $9 an hour trying to buy a $500,000 home, I mean, no, that's not going to work. But, I mean, if you're making $51,000 a year and, a home that you're trying to buy at $300,000-$400,000, that's plausible. But probably what the hiccup is, it could be your financial situation. And we can help you out with your financial situation. Matter of fact, he can help you out with the financial situation.
Hey, Akeen, I got your message here. It says, can't hear you. The problem is if you missed the first part of this, we were having problems with the mic, the cord. So we had to actually do an alternate route and we have a different mic that we're actually using right now. So unfortunately, it's his best. This is like a test trial for us. So we're just trying to look at this and try to get the kinks worked out. But hopefully you can bear with us. I'm sorry about this one. The next one will be better. But that's really the reason why you can't hear us too well, Akeen.
Okay, so let us know in the comments below if you can hear us now. How's the audio coming out? It's okay? Cool.
All right, so let's talk about kind of the position that you're in and what happens with these new homes. You have a lot of your properties that come in, and there's a lot of stuff that goes out where people can get things, but it seems like builders are not giving as much to buyers these days. And so what I want to bring up is, we work together, and we're not going to do all the programs and all the deals together. But I do want to say that there is opportunity for me as a lender, even though there's incentives with builders, to still do loans for them. And I'm not saying that, look, if you're getting $15,000, $20,000 and you're getting a 3% rate,
then go with the builder.
Go with the builder. Don't even talk to me. But that's not happening as much, and you got to weigh your options. And so if you're somebody out there, I know 99.9% of your business is new home.
Yeah.
But just take a second opinion. It doesn't hurt. And see what the numbers are.
Well, I mean, here's the thing. When I work with buyers that are looking to buy a new home, they'll look at the lender and see what the incentives are. We're doing a deal right now where, this client was working with the builder, but the reaction time was very slow, okay? There's no response, and they felt comfortable with using this lender. But with this lender, you're paying $3,000 more in this case. However, you get the service, you can call this guy anytime, right? And at the end of the day, you're getting a lower interest rate. And that's what you have to take a look at. When the dust settles, how much are you really coming out of this deal? Because at the end of the day, this is how it works when it comes to financing. You could pay it up front, or you can pay it on the back end.
Yep.
If I had to have a choice, I would rather pay the money up front, because if you paid it on the back end on a 30-year loan, you're just getting screwed. I mean, you don't want that, right? So these are the things that you have to take a look at. Yeah. And you have to do your homework.
Well, the thing is this, 3 things that we always look at for a lender. All the millennials and everybody out there, what do? They do consumer direct.
Yeah.
They're going online, they're doing stuff on their own, and I get it. I do the same. Like, I don't want to talk to everybody.
Yeah.
I have it really easy where you just go online and everything's done online where we get you approved. And But the 3 things you look at is this. You look at service, right? And that's one thing you just put up, right? How quick are you, right?
I mean, why do you keep pounding the table? You're like, yo.
Because I just want... You can't handle the truth. No.
All right.
Service.
Yep.
Rates. Fees.
Yes.
Okay. That's it.
That's it?
That's it. You look at that, you got good all the way around, I would consider using that person. How many people come into my office these days and sit in front of me?
Yeah.
I'm going to say maybe 10 a month. It used to be like 30 to 40 minimum. No joke.
Yeah.
Now it's maybe 10. And a lot of them don't even, they just want to come see me. They don't even want to really like talk about the loan. The loan application's already done. The rate's already been talked about. Hey, Dan, I need to come out and get the details. And we're sitting there, we're talking about his life or her life. You know, like, yeah, you know, I need to get this and a water heater and I want to do a cash out refi. And I'm sitting there going, okay, well, let's talk about us. So that's pretty much it, man. I think it's just about what you're offering as a lender. It's about, and to simplify this, you know, what is, obviously everybody's like, rate. I get it.
I've noticed that. It seems like, here's the thing, 10 years ago when we were like at 5%, people were happy.
Yeah.
Now anything above 4, motherfuckers be tripping.
Dude, if I say 5%, I just hear a dial like nothing. Like, quiet. Yeah, I got a 5%
so that's
rate.
the first thing that's out of their mouth is, hey, what is the rate?
I would say so, and I think it's because they're conditioned, and that's fine. But
yeah,
and it does play a big impact on your mortgage payment. But there is things where you have earnest money deposit, you have service, you have fees. Like we just got one from a builder; they were charging like $5,000 in fees.
That's just crazy.
I don't charge any fees. I did a VA loan for veterans out there. We have no closing costs, no fees for us.
Oh, the camera's right there.
Well, yeah, I'm looking over here because I want to see how I look. I want to make sure I look hot. All right,
there you go.
No fees.
Yeah.
So, anyways, the thing about it is that we got a lot of opportunity, and I think that when you look at rates, you look at fees, then you look at service. Now, why did one of our clients pick me? It's because they sent their information in, we got an approval letter through underwriting within a 2-day process.
Yeah.
I'll tell you guys, there's no lenders out there, maybe a few, but not that can really go to bat and say, you know what, we're going to get this done in 2 days. Get the full underwritten approval. I sent over the letter to the builder, and the other lender is still working on getting the paperwork.
Now, when you say full underwritten approval, what is that?
That just means that an underwriter's looked at everything but the property. Okay, the underwriter also underwrites the property too. But obviously, if it's a new build, it's not been built, right? So what they're looking at is your income, your assets, your overall credit history. They're looking at your debt to income ratio.
Yeah.
How much you're putting down. What do you have for reserves? Which reserves are money left over after you've made your payment, or not your payment, but your closing costs and your down payment. So.
And this is where it's really important. When you go out and look at a brand new home or homes, the first thing you need to do is speak to a lender and shop around and get your ducks all in line before going to a new home strat and getting all excited, because a lot of these contracts, you'll see that you'll have to get fully approved within the 30 days. And what happens is some consumers will go out there, put money down, get excited about a home. Next thing you know, they're scrambling. Why put yourself in that position? Because you're going to have to get full underwritten approval. To get full underwritten approval, you know, your lender's going to have to collect a few things. I mean, you can't just fill out an application and you're approved and you're ready to go. You're going to have to turn in financial statements and all your assets. Am I correct?
That is true. And a lot of people don't do that.
Yeah.
A lot of people, what they do is
they stress.
Well, I just talked to an agent yesterday. We got a deal that she's calling me. And what happens with the selling agent? Hey, Dan, how qualified is the borrower? Did you talk to them about their credit, assets? Yeah. She's like, well, you know what? You'll be surprised of how many people as lenders don't do that. She's like, I got approvals that said they're stellar, they're solid. Now they're not getting a deal, and this is, you know, I guess it happens a lot of it.
And I'm going to tell you this, because once you have your conditional approval, that means you've turned in all your paperwork. That just shows that you're a strong buyer. Now, when you go to the table to negotiate, you're going to have more leverage versus being pre-qualified or pre-approval. Because here's the thing, when I have a listing and I get a pre-approval across my desk, I'm like, yo, we need to check your financial situation. Not only that, I want your buyer to get pre-qualified through my lender, because I want to make sure you're a solid buyer. And that's what these listing agents or the sales agents will actually look at, because they don't want to just tie up a deal to see what if you do get approved. And that's what makes a good sales agent and also an agent too as well.
Plus, you gotta have a team. We talked about this a lot.
Like the dream team?
Yeah, it's like, okay, sounds cliche.
Can I be the star?
You're always the star. You got 100,000 subscribers. How are you not a, come on, man, that's the star of the show. I think I'm up to 30.
Hey, you know what? You
know
gotta
what I mean?
start somewhere. You gotta start somewhere.
By the way, you know what I was going to tell you. So,
yeah.
if you guys want to start the application process,
Yeah.
okay, VegasLoanGuru.com. You can go there.
Ooh, I like that. Is that your new plug?
That's my new plug. VegasLoanGuru.com.
You bougie ass motherfucker.
Hey, go there.
Yeah.
Fill out the information. Make sure you put it referred by Chuck, so I know it's Chuck that started this process. There is a referral button or a referral place to put in his name.
I like that. That's cool.
So yeah, I would love to do that.
And this is the first time I'm hearing about this, so.
Yeah, it's just because I was thinking last night I'm going to take advantage of this thing, so I put it all together last night, Chuck.
So basically what he's doing is he's tapping into our subscriber count, so that way he can plug himself in. Matter of fact, what is your YouTube channel name? So that way people can find
it's Loan to Keys. And a lot of the stuff, guys, look, Chuck's got he's really good on the video content. He's really good, so I'm kind of getting started, but what you're looking for from me is, yes, my videos are going to get better as they go. They're not up to his standard, obviously, but there are going to be a lot of good content on it, right? There's a lot of good stuff that maybe you don't know or didn't know about. That's what's going on in the financing world. And what I'm putting out is like stuff that happens weekly. You know, what are interest rates doing? What's going on with the trade? How is it affecting the housing market? How is it affecting your payment? A lot of this stuff is just out there because I think lenders don't really go out and do this where they put that information out there, especially through a video.
Yeah.
You know? So I think what it is just me just trying to say, hey, you know what? I'm going to give back a little bit. This is more of a content oriented type of, business now where people are going to seek you online based upon what content you're putting out, what videos. They want to be personable. It's not like it was before where, man, when I got in this thing, it was like the Stone Age, if you want to. It's like people would literally come to you and say, you know what? Don't really care what the rate is. I don't want a crazy interest rate, that's real high. But they did it off of referrals. They did it off of a shake of a hand. They did it off of just being customer oriented.
Yeah.
People never even went online to shop for rates and loans. And it's like these days, obviously, it's different. When I got into business, there was a guy that literally, he had people lined up out the door. He was just like, Mr. Hey, how you doing?
Suit and tie kind of guy?
Oh, he was a suit and tie kind of guy, but he was very personable. They did business based upon who he was. Today, it's not that way. It's based upon what is my rate, what is my payment. People don't care about that. You know what I mean? So.
Yeah, there ain't nothing in here.
What do you mean, Chuck? You said you were going to give me some coffee this time, man.
Hey, I'm going to plug this in. If you guys want some CKG merchandise, go ahead and click on the link in the description below.
Oh, guys. So anyways, let's look and we'll see what we got here. What does your credit score give to you to buy a house? Well, that's a good question. So let me tell you this, and you probably don't know this question. There's government programs out there.
Did you just make that up?
Well, right here. He just said it.
Okay.
Come on, man. I ain't gonna be that. I can just be like, hey, let me answer my own questions. All right, so.
Did this ain't the finance show?
How do you call Dan? Oh, I'm just playing. I was just joking. So look, let's answer his question. FHA and VA.
Yes.
There is no minimum requirement for credit scores.
How is that?
Because they don't require it. Guess who requires it? The bank. The bank requires minimum credit scores.
Yes.
Guys, we could do a 500 credit score if you have 10% down, closing costs and reserves, and you cannot go over 40%. 500. Now, I'm going to tell you something, though. I'm not doing those loans that many because...
Isn't that bad credit or something? I mean, don't you start off at 500?
Let me just say this. Everybody has things that happen to them.
Yeah.
Does it mean that they are going to be eliminated from getting it done? No.
Yeah.
Is the challenges there at 500? Absolutely. I don't know. To me, I don't know what, it's really depend on the client, but I can tell you the three big factors. You have to have 10% down.
Okay.
You have to have closing costs, and you can't have it, paid by a lender credit or the seller paying for it. They want you to pay your own closing costs.
Yeah.
And you have what's called reserves, which is extra money left over in case something happens, and you can't go over 40% debt ratio. So why is that so important? Well, if you got 55% debt ratio on normal loans, and you're only at 40 on that loan, your purchase price is dropping significantly. So, to answer the question of what is the credit score, there is none, but 580 is a starting point. Where I see the sweet spot, where everybody's not going to have an issue, I mean, it's a sweet spot.
620?
620.
Well, let me ask you this. What is your interest rate, like 14%?
After all the fees?
on on a serious note, like at 620, and everything's worked based upon tier brackets. Am I correct?
Yeah, but so let me say this. So government loans are a little bit more even keel when it comes to rates because it is off of risk and profit. But you got to realize the government's coming in saying, look, we're giving these opportunities. So at a 620, what we're going to do is we're going to give you a little bit of a break. We're not going to charge you a high interest rate because it's guaranteed or it's insured by the government.
Mm-hmm.
All right, so that's important. Now, conventional loans are all credit score driven. So if you're buying a home and using VA financing or you're using an FHA loan, Federal Housing Association, then you're at a 620, you're not going to have a terrible credit score because the insurance and the guarantee from the government. Now, if you're buying a 620 or getting a home with a conventional loan at 620, dude, you're probably at like 6% rate.
Yeah.
So.
All right. Let's see here. Because we missed a couple. Let's see if we have a good question regarding finance or the housing market. These are all mostly shout outs, so.
Shoot out some questions, guys. If you guys have questions right now on just what's going on with rates, housing market, anything.
Matter of fact, the other thing is that, let me know in the comments below, should we do this on a Sunday at 10 o'clock? Or should we do this during the weekdays? Because I've noticed on the weekdays we get more people that are more engaged, you know what I mean?
No, I think
today's a Sunday, you know, people are just probably like chilling. And,
but here's my thing about it is these people all know everybody, right? Or not everybody, but they know people that may need a house.
Yeah.
So you're reaching out to the people, you're trying to let them know like what's going on here. We're giving them some content, some education, and they'll take it away. And everybody dissects things differently, digests things their own way. And then they're going to go back and be like, you know what? I'm going to use whatever it is. Maybe they learn something from this and they can better make a decision. You know?
Here's a question. Dan, can I see your pecs?
Yeah, right.
No, on a serious note. Do you really have to wait 2 years to buy a house if you file bankruptcy? It depends on the type of bankruptcy, right? Chapter 7,
well,
13.
yeah, it's the type and it's also the program.
Yeah.
Okay.
So let's talk about this.
FHA, it's 2 years from discharge date.
So what does that mean? So if you were an FHA buyer.
For a Chapter 7.
Okay. So if I owned a home right now and it was an FHA loan.
Yeah.
I filed bankruptcy on a Chapter 7.
Yeah. When all the debt is cleared, that's your discharge date. It's 2 years from that starting point.
That's important. Discharge date. A lot of people think once they file, it's actually the discharge date.
Right. That's when all of the debt that you put into it, into that bankruptcy, is either paid back or it's satisfied through the bankruptcy.
Okay.
That means there's zero left, and it'll have a date actually on your credit report that says everything's been satisfied as being like a derogatory or something that shows up, and that's really the starting point.
Now, what about Chapter 13?
That's a 1 year. Okay. Now that's for limited things. And the big thing about I want to tell you guys about something that goes on with this is that a lot of times people don't include their mortgage into the bankruptcy.
Is that a good thing?
Well, and it is, but it isn't. And I'll tell you why. Because if it's called assuming the debt, or you're taking over the debt and continually making payments on it. A lot of times it doesn't show up on your credit report because the bankruptcy sometimes just wipes it all away. And you have to reaffirm it, or you have to show that you're making the payments on it again. And a lot of times, if you file a bankruptcy, what happens is that, you have to show that, proof that you've made payments. And if you're trying to get a loan, what is the next step? Well, you got to get 12 months canceled checks showing that you've made that payment.
Yeah.
Or you have to somehow reaffirm it so it shows up on your credit report. The problem is that the underwriter can't see that it's on your credit, that it's not on your credit. So.
And that's one thing I want to talk about. When you're speaking to a lender, make sure you disclose everything, because sometimes things are not caught up just yet with the credit pool. And next thing you know, you're under contract. And we had a problem like this a long time ago where we found out there was a bankruptcy or something like that, and it just totally screwed up the whole deal. So make sure you disclose everything to your lender. Here's a good question right here that I want you to answer. Does the stock market have anything to do with buying a house?
Yes.
Actually, it does, big time. So explain how the stock market affects the 30-year bond, how the 30-year bond affects our interest rate.
So it's
how it
real
affects the
simple.
housing
So
market.
in a perfect world, you have the bond market and the stock market, and everything's kind of working together. They actually work inverse.
Yeah.
All right. So the bond market looks at really what's going on with geopolitical news, what's going on with negativity in the market itself. any uncertainty or things that's going on, that's big events.
Mhm.
You know, the big thing that we have right now is China and the U.S.
Yeah.
You know, and that plays a big part on what happens with this. So when you look at the bond market, mortgage-backed securities, you got a 3% coupon. That's really one of the big barometers.
What does that mean for the viewers?
It just means a 3% yield.
Okay.
It's a long-term bond. It's a 30-year bond. So what affects mortgages or mortgage rates?
Yep.
Geopolitical news, economic data.
Mhm.
You have, you know, just things like within the employment data. Anything that's negative out there
Mhm.
plays a big impact on what rates do.
Because investors, they get a little bit paranoid. They kind of retract a little bit.
Well, what it is this. So everybody's looking to save their money. You got big, and we're not talking about investors like us. We're talking about like hedge fund investors that got millions and
Real
millions.
money.
Yeah.
Big time ballers.
It's like, okay, I'm going to make a huge profit off of a big swing.
Yeah.
And so what is the bond market? The bond market is a safe haven for investors. The stock market is like Vegas here. It's like gambling. All right, I'm going to go in the stock market. I'm going to invest my money here. I'm going to invest it here. I'm going to get a return here. Great. Now, what is the bond market? The bond market is just like, oh, I'm losing all my money. All my chips are going to be gone.
This is a guarantee.
Well, it's not a guarantee, but it's okay, I'm going to take this money. I'm going to put it over to the bond market, and I'm going to hold it there, and I'm going to see what happens. Now, what happens is they play this game.
Yeah.
The game is that, well, if the stock market, or if the economy is doing well and things are good, then they put their money in the stock market.
Yeah.
Okay. When you start to hear geopolitical news and things that's going on, the economy's not doing so well.
wanna go to the bonds
let's
and-
retract.
Mm-hmm.
Let's pull that money out of the stock market and put it in the bond market.
Yes.
So what happens is, if you need investors to entice them to come to the bond market, what happens if the bond price of that bond goes down, the yield on the bond goes up,
Yeah.
and so does the rates.
Mm-hmm.
And so what happens is if you have investors pulling their money out of the stock market, putting it in the bond market, the yield on that goes down, and what happens is rates go down. So it's an inverse relationship. So if you hear the economy doing well, you hear the stock market, you know, people are investing, you hear record highs, it's not good for mortgage rates.
Yeah. But here's the thing. Why would you even want to buy a bond on a 30-year when it's, I think, at what, 2.9 on the 30-year or something?
Well,
a 30-year bond? I mean, you ain't making nothing.
Yeah, but the thing is if you have billions of dollars you're investing,
I guess so.
you're making a ton of money. Like, it's not like, well, off of a mortgage, one mortgage, yeah, you might not be making that much. But think about this, Chuck. When you start for a loan for me, okay, and let's say you're one of those guys that's like, you know what, nothing's going to change in my life. I'm not going to pay any more
I'm just
money.
going to live in that home for 30 years.
If you have a $300,000 mortgage,
That's just like 600 and some change.
600. So you're making 100% profit just off of that.
That's crazy.
If you did the same thing, most of the people leave their home in 7 to 10 years. So that's the big thing.
Mm-hmm. Gotcha. Let's see what else we got here.
Is it smart to pay off, who's this, First Lady Jay? Is it smart to pay cash for a home, and if you pay cash up front, is there a discount on the home?
If you pay, I mean, here's the thing. In today's market, if we take a look at the type of buyers out there, about 28% are actually cash buyers and 55% are conventional buyers. FHA and VA, the total, they're about probably 20-something percent. So what this tells you in today's market, the way that the housing market rolls, is that even though that you're a cash buyer, it doesn't mean you're going to get your offer accepted. The only thing that's great about cash buyers today is there's no appraisals that need to be done, and normally they buy the property as is, where is. So the way that the market is so hot right now, a lot of sellers are accepting conventional buyers or FHA buyers, which are beating out cash buyers, is because it's the way the offer is written. And if they can make another $3,000 to $5,000 more to close in 2 or 3 weeks later, who wouldn't want to wait? Am I right?
Right.
So you might as well just wait it out to make a little bit more money.
Right.
Now, cash buyers, normally the investors that do have cash, what they'll do is they'll buy homes that banks won't be able to finance. So if you're an FHA, VA buyer, or conventional buyer, the home is dilapidated and it needs to be rehabbed. Now that home can only be sold to cash buyers. Now, if you're a cash buyer and you're buying those type of deals, then you're going to have to go in and rehab. Now that's a whole nother story. Now you have to know how to rehab homes. Okay?
There's a lot to it.
No,
you know?
it is.
And if
There's
you
a lot
got,
of
if you
moving
got
parts.
cash, man, I mean, you're looking to save money, you're looking to invest. Usually it's an investor, right? I mean, we just say, it's not, I mean, it's very rare you find somebody that's going to buy a primary residence that's like, I'm just going to buy cash, unless you're somebody that's going to retire, or it's like your last home and you just don't want a payment. Even guys that are doing, or people and women too, I mean, just people in general, jumbo loans,
Yeah.
right? It's like, okay, great, I'm going to buy an $800,000 home, but they're coming in with $700,000. They need a $100,000 loan.
Yeah.
Why do they want to do that? Because they want to hold 100. Makes sense.
Taxes too, probably.
They just want to hold it, and the 100 is okay. It's a small payment, but then I can keep that money in my bank too.
Yeah.
And I'm not going to just take. And where do these people come from? California, places where they're selling their house, making a mint, and they're just coming here and they're investing their home.
So like yesterday, we just negotiated a deal. We have a client together. Matter of fact, we just went into contract. Congratulations on that. We just got it full executed probably like an hour ago. Anyway, same situation. She has cash to buy the home outright, but she is about to retire. Okay, she asked me, should I just pay cash or should I just finance? It comes down to your situation. Okay, this lady's about 65 years old. The average person that lives in the United States will live to about the age of 85 before you croak. That's the average. Okay, according to Harry Dent, by the way. Now let's take a look at this. You have to take a look at your situation. Okay, when you retire, how much money is coming in? What your comfort level as far as your monthly payment every single month. Sometimes it's worth it just to pay it all off, but if that's all the money that you have and you're throwing into the home and you're about to retire, maybe that's not the best way to go. But now you have to take a look at your financial situation. So with this lady, she knows when she retires, she's probably going to make about $60,000 a year. Okay? So at that point, she should have some money or some cushion just in case if something happens for a rainy day.
Absolutely.
But have enough to put down to have such a low payment that she doesn't have to worry about versus throwing that money all in your cash. Because the problem when it comes to real estate, especially when real estate investing, when you take your money and you throw it all into that product, the problem is that when the market tanks or when you need to liquidate, you can't get your money out like how the stock market, like that paper asset where you can get that money out quick. With real estate, it's hard to get that money out. So you have to take a look at your position where you are at. Am I correct?
That's right. You're absolutely right. Let me take a cup.
Take a sip.
You forgot my drink.
My bad.
Come on,
Hey,
man.
This is just for looks.
Is this
right
a
here.
plug too?
This is a plug. Hey, we got the merch, got the hat, you got the cash flow for the young entrepreneurs. Click on the link in the description below.
Hey, so I want to say a couple things. So
Yeah.
what happens when I have an investor, and I've had this recently, where they came in and bought a property that they're living in. I mean, not an investor, but a person buying a property, and they want to put a large down payment. So you're asked the question. We're just kind of branching off from what we talked about. They're putting a lot into it. Why did this gentleman put a large down payment? It's because he's retiring.
Yeah.
And then the big question I have is, well, Dan, when does it make sense to buy down the rate? What does that mean? It means you're putting extra money to buy down the cost of your interest rate to have a lower payment. Okay? A lot of times it doesn't make sense. Now, if you're buying this home as a retirement home, even an investment property, I brought this to his attention. Look, you put down an extra $3,000, okay? You're saving about $80 a month. Do the math. How many times will you have to pay $80? Well, actually pay the $3,000 up front. You're going to save after so many months, right? So you have to do the calculations. When is my break-even month?
So basically, you're going to take the $80 divided by the $3,000 of your buy down, and that tells you how many months you have to stay in there to actually get that money back. Sometimes it's not cost effective. Sometimes investors will do that and they'll actually end up losing out. So it's really case by case basis, and you have to break down the math on that. Here's a question right here. Do you think the Fed reserves will go negative rates, and would it be better to buy at that time? If the rates go negative, what happens at that point, you can actually run into hyperinflation. Not only that, the dollars that you have, you'll lose the value of your dollar. So it's going to be case by case basis. But matter of fact, I did some research last night about this situation. There are other countries that are doing negative rates right now.
Right?
Well, no, it's not Japan. It's some European country. But now other countries are following this country. But they did a negative, and basically what happened was people started getting paranoid, and what they did was they went out and started spending money, and it actually stimulated the economy. And that's the thing about the Federal Reserve. It's kind of like a fine balance. You have to have some sort of inflation, because with all the money that we are spending, right, with government spending.
Let's just talk about the Fed. The Fed has made numerous, just ways they've looked at different ways to manipulate the economy.
Yeah.
And I think they figured it out. And so you always hear the Fed's fund rate and all this stuff that's going on, and you know what? The Fed's fund rate doesn't have any impact on mortgage rates. It's that's a short-term bond, student loans, car loans, all these other things, right? So why are they doing that? And why are they going out and saying, guys, we're lowering rates? It's really a psychological thing.
Yeah.
The economy is based off of consumer confidence, right? If you're saving your money and the economy's not going and you're not spending your money, that's the problem we had in 2007 and 8, really, is there was a hint of caution, banks were about to implode.
People got paranoid.
And they saved their money. And what does that do for our economy? Our economy is a debt-based society.
Exactly.
So you have to spend money. So if you're saving your money, what does that do? It really hurts the economy.
It retracts.
So when you're out there and you hear the Fed's like, well, they're going to cut the rates again, it does provide more money for you because maybe you have a lower credit card bill, or maybe if you have to go buy a car, your car payment is as high as it was. Or if you got to get a student loan, your loan is not as high as far as the monthly payment. But it doesn't really affect mortgage rates. And really what it does is they're trying to do this so that way there's more money in your pocket as a consumer to go out and spend money.
Gotcha. What percentage of houses can you pay monthly? I don't understand that question.
What percentage of the house can you pay monthly?
I don't understand what they're saying.
I don't know what that means either. Is that down payment? Or what is that? Are you saying what is the principal and interest percentage of the house you pay monthly? Like what is, I don't know what that question is.
Talking about down payments, what are the programs right now out?
This guy need an air horn sound effect on this podcast.
Is that a good thing or a bad thing?
I don't know. Show us your air horn effect. So anyways, I don't know. 30% of your paycheck should go to housing.
Ooh, that's kind of a lot. 30%. I would say on the safe side, 10% of your income should go towards your monthly payment. I mean, 30%. I mean, that's a pretty big chunk, and that's just my personal opinion.
Let's say this, okay? You have to. That's kind of a really general question, though. It's not really detailed. And what I mean by that is, well, everybody in this world has a different threshold about what their percentage they want to pay. Millennials are very conservative. When you're saying 30% of your paycheck, well, what other debts do you have?
Yeah.
Right? Do you have car payments? I saw a car payment the other day, $800-900 on leases. Why would you? I mean, now you got to put in perspective. Well, how much money do you make?
That's not bad.
$800 or $900?
Yeah, that's not
bad.
No,
that's terrible, bro. All right.
Hey, inflation.
But the question is 30% down, or 30% of your paycheck? Excuse me. Is that something you want to pay for a mortgage? I don't know. I mean, it also you have to take all of these factors in consideration, and that's what you would discuss with me. VegasLoanGuru.com.
I mean, think about this. If you're making $10,000, that means you're paying $3,000 a month. I mean, that's still a little bit high. I mean, I guess it's just, all preference. Is this going to be your primary residence? Is this going to be a home that they're going to take you out in a body bag? You know what I mean? So it's just case by case basis.
I mean, the thing is this. It's like when you go out, you have to look at the whole picture. It can't just be, well, I make this and this is my payment, and how does everything else affect me?
Yeah.
Right? Everything else is affecting you because you have to take, look, you're the one making that payment. It's not us. I mean, so I would say you have to really feel what, if you're paying, let's say your rent's $1,500.
Yeah.
Are you comfortable going to a mortgage at $2,500? You know, think about that.
That's a lot of money.
The other thing too is if you're an investor and you're trying to buy a home, right? Or not an investor, but somebody just buying a home and you're putting money into it, you can't pull that money out.
Yeah.
Okay? That's yes, it's equity in your home.
Yeah.
But that's not like hey, I'm going to go to the bank and take the money out.
Yeah, you're not going to be able to do that.
You have to take that in consideration.
Let's talk about insurance. Can you explain more about insurance for a house? Yes. So let's talk about insurance on a home.
Sure.
I always tell my clients this, whatever lender that they work with while you are under contract, contact your insurance company so that way you can actually bundle your package and it'll be a lot cheaper. Not only that, you want to get your insurance agency in contact with your lender so that way they can process the paperwork at the close of escrow. Also, you want to see what the guidelines are because the investors or the lenders will have a certain threshold or certain insurance policy that they are going to require, and that may be a little bit more than what the home is actually worth.
Yes, it's what's it's insured up to.
Yeah.
You got all your belongings, what you want to include in that. What happens if you have something else, like let's say if you had something on the house that was additional.
Yeah.
Okay, what is the insurance going to cover on that? What is your deductible?
Yeah.
Okay, you have to put all these things in consideration. There's about 6 or 7 things to go over.
Yeah.
What they're looking for is basically making sure that if something happens to the home,
how much does it cost to rebuild this home?
To rebuild the property.
So that's the main thing. Now, also want you to understand is once you get insurance and you move into your home, let's just say, the home is, you bought it for $300,000, but to do the construction was only $250 on the home. So that's what you have the insurance at.
Yeah.
But let's just say 5 years down the line, now your home is worth $1 million. I would probably highly advise you to go back out and see exactly what is your home worth at that time and how much would it be cost to build. And now you may want to get insurance based upon that cost, because during that time with that policy at $350,000, now it's worth $1 million, but it costs us $600,000 to build. You may not be able to get that thing covered. Also, vice versa. If you bought it for $1 million and it dropped because of the cost of production to build that home with materials and supplies, you may want to drop that so that way your insurance is a little bit lower too as well.
Yeah, let me give you an example. You got a $1,000 deductible, right? That means you have to pay up to that, and then they usually do up to 150%. So if you're doing a $300,000 loan,
yeah,
they'll insure up to $450,000.
Cool. Now the other thing is that with these damn deductibles, and my house flooded once, actually twice, through one claim basically, and we had to make 2 claims after. My insurance actually dropped me, and I had to go find another insurance company, and it actually cost us more money until we were in good standings, and our company picked us back up too as well. So
I want to say one thing, guys. If you want to go, like we plugged it in earlier, VegasLoanGuru.com, you can go there, and that's where you can find me. I work with guaranteed rates, so if you guys want to go there and check it out, that's where you want to go and start that process. Also, make sure you put chakits in there, because I get a lot of people that go there and they fill out applications, but then they don't put the referral source. And it's very important for me to track that. And I want to make sure that Chuck's getting credit. Obviously, we're trying to do this and promote business here. So,
okay, got a question for you. Does the Las Vegas market still have down payment assistance programs? Can you obtain these programs, then still present cash at the time of closing in order to pay down the percentage rate?
So here's what I want to tell you guys.
So let's talk about down payment first. Then let's get into that.
Down payment assistance is really, there's different ways to look at it. Down payment assistance is, depending on what program, it's income restricted.
Yeah.
It's zip code restricted.
Oh shit.
Okay, so then there's only certain pockets. Now there's some out there, Home is Possible. You got a teacher's program. You got even a veterans program. And basically what they do is they help you either with closing costs or a percentage. But the problem is you're not going to get the best interest rate. Now, depending.
Why is that?
Well, because everybody's got to make their money,
yeah.
Right? So there's additional fees on top of it. So really you're paying more up front. On one of the programs, you have to stay in the house for 3 years before you can sell or refinance, or you have to pay a portion of that money back. So there's a lot of things that goes on. Those are pretty much set as far as what those rates are, and those people need to make money. Most of the time, when you want to try to buy down a rate or something pertaining to that, there is some options, but for the most part, there's not.
Yeah. And
that's something to look at. For the most part, they're just like, look, because we have to realize this. They're in it to make money too. They're offering programs and product. Now, not all of the entities are in it to make money.
Gotcha.
Is there opportunity? I mean, for me, it's like this. If I'm going to say, you know what, I'm going to buy my rate down, I'd rather just get a regular loan. And I'm not going to go into detail, but I would flip it. I wouldn't put myself in a down payment assistance program with all the extra stuff. And if I'm thinking about buying my rate down and I'm thinking about closing costs, well, if you're doing a down payment assistance, you still have to come out of pocket with something, like 3%, something. You can't just, they're not going to say, here, here's all the money. Now, there's some programs, but for the majority of them, you have to come out with something. So there is a way to do it where maybe you just pay a down payment and get the better rate. Down payments usually from 3 to 5%. And then I'll give you a lender credit for the closing costs.
So basically, don't think you're coming into this deal with no money.
Again, it's a very general question. And it's a question that you need to fill out an application and go, okay, let's go off of process of elimination.
Yeah.
Let's look at this one. Let's look at this one. Let's look at this one. And then at the end of the day, then we're like, well, what makes sense for you? But there's no real cookie cutter way of saying, is this the best program or not?
Yeah.
Everybody's different.
Now,
That's really the truth.
Now there are times where we do a program and we can get closing costs and negotiate the deal. Where we actually did your sister and your brother-in-law, where I think they only came out of pocket was like $500.
Yeah,
that time.
but here's the thing. They
But it was
had,
best case scenario. We were able to negotiate it, so all the moons and the stars did line up.
here's the other thing too. They did this 4 years ago.
Yeah.
Or maybe 5 years
Yeah.
ago. Now during that time, it's timing.
Yeah.
Just like my parents. They're looking at doing a refinance. Why are they refinancing their home? Well, we talked about the 3-year waiting period.
Mm-hmm.
Well, that law was into effect, I believe it was in the beginning of 2018.
Yeah.
Where if you got into a home using that, see, they caught on. They knew that what we were doing is basically giving them a loan and then turning around in 6 months and giving them a refinance
Yeah.
and lowering their rate. They didn't stay in the property that long.
Mm-hmm.
So now they made it a law where you can't do that. So they're in a position where they can refinance their house. Now, if you're after 2018, I don't know. I don't know if I want to be stuck in a home for 3 years and then I have to pay back money that I didn't count on.
Okay.
You know?
So now let's see here. Can you obtain these programs and still present cash at the time of closing in order to pay down the percentage rate?
Well, we just talked about that.
Okay.
You know? So basically what that means is that it's a case by case. And the thing is for the majority of them, no. I mean, but you have to look at what is the other options besides down payment assistance? Because everybody thinks down payment assistance is I'm not coming out of pocket with nothing.
Yeah.
And that's not the truth. You still got fees, you got title fees, you got an appraisal, you got a home inspection, you got fees to the lender if you're not a veteran. I mean, there's a lot of stuff you have to put in consideration. It's not just, let me walk up with a couple $1,000s and let's get into a home.
Oh, it doesn't work that way?
No, man. I mean, maybe if you want to go to D Street or something.
So will you explain to the people about rent to buy good thing or a bad thing? So rent versus buying a home. So the first thing you need to do is speak to a lender, see exactly how much you would be approved for, what your monthly payment would be. Once you have that number, then you would go out to the marketplace, look within the neighborhood that you want to buy a home, and see exactly how much does that home cost and how much your monthly payment would be, okay? Then from there, within that same neighborhood, you want to see the rentals and see what the average rents are. If the rents are lower, then you may want to rent. If the rents are higher, you may want to buy. But now it's a case-by-case basis. That's why if we take a look in today's market, 40% of the market are renters, 60% are buyers. Because if we take a look at the median price point for a home at $310,000, 3 bedrooms, 2.5 bathrooms, 2-car garage, 1,800 square feet, your monthly payment for something like that is roughly going to be about $1,800 a month. But if we took a look on the rental side, an average about 1,800, 3 bedrooms, 2 bathrooms for a rent is about $1,600. So now the question is, we have a difference about $200 something. Now, the question that I have to ask you is, are you willing to pay $200 more to own a home? So let's just take a look at this. 200 times 1 year, 12 months, that's 2,400. If you took that 2,400 and you bought the home and you had taxes, deductions, now you are on the green on the rents.
Mm-hmm.
So it's really case by case basis. Also, you have to take a look at your situation. How long are you going to be living in the property? If you're going to be, settling in for 5 years, then that's something that you may want to consider. But if you're not too sure if Vegas is going to be the place, then you just want to rent a home.
That's right. Real quick, I got a question here. It's VegasLoanGuru.com. So my company's name is Guaranteed Rate. I've been working with Chuck for 7 years?
Yeah, probably about 7 years now.
So Guaranteed Rate is the company, and that's just so I can answer. I think there's a couple of questions on there. They have a question on here for you.
Okay, what is it?
Do you believe in haunted houses? See this right here? And have you ever sold one? Did you have Casper living in a house and you sold it? And...
However, I don't know if this is the same person that asked me last night when I did this video, but I did walk into a home where I kind of felt eerie about it. It was freaking weird vibes. But then I found out it was actually a murder-suicide. And the client that was actually interested in the home was actually considering buying that home. But it was just weird. It just felt weird.
Do you feel weird selling that to people? Like if you know that's happened and you're not gonna tell people oh, there's a murder-suicide. But
well, here's the thing. In this state,
that's
you can
crazy.
discuss, or you can disclose that you can't discuss that. So you're gonna have to do your own research. However, we found that out from the neighbor that told us, and we did the research on it, and that's.
But I mean, wouldn't you rather not them tell you? I'd be like, I don't want to know about this because look.
Well, you can't. It's just like when I did a short sale on a home, right? Somebody had passed away. I didn't know if they passed away in the house, but they had to sell the home because the owner had passed away. and it was actually a suicide. However, I didn't know if it was suicide in the home or somewhere else, but I didn't ask these questions, okay? Because the problem is that once you become a real estate agent, you have the duties to disclose everything. And unfortunately, it was such a touchy subject, I didn't ask those questions. Because if you don't ask, you don't know.
So it's like you
don't
start
have
out
to
like
disclose.
this. You're like, all right, guys, before we start looking at this house, this is a murder-suicide. And I just want you guys to make sure you're aware of
Hey,
it. And
there's like a chalk line. As you walk in, there's like a chalk line. It's like, don't worry about that. It's good.
I think we get a discount on this one.
Yeah.
Though.
Let's see, what other questions do we have? So we're gonna wrap this thing up here in the next couple minutes here. We're going on strong. I think how long we've been on this?
I don't know.
64 minutes. Man, this is actually kind of fun. Let's see here. Okay. Living in a gated community. Now, living in a gated community, don't be misled. Okay, a lot of people think by living in a gated community, crime won't happen. Okay, crime will always happen all over the place. It's really how you secure your home, knowing your neighbors. Like, I live in such a trendy area. I literally live off of Las Vegas Boulevard.
Sure.
But people are always coming and going because of the location I'm in. I'm in a gated community. I have about 132 properties in this neighborhood. Now, if you take a look with the crime statistics within my neighborhoods, there's always break-ins.
Oh, yeah.
However, when you buy a home, right, you want to make sure you're buying a home that's positioned correctly. So when I bought this home, I bought the home within a cul-de-sac, but I had homes surrounding my home. So I have a total of 5 homes surrounding my home. So, number one, it makes it harder for somebody to jump the wall into your home. They would have to go into somebody's house. Somebody's property to get into my property. Number two, I have security systems all the way around my house, and I have it also plastered. Also, I have break protection on my windows. There's a film that you can actually purchase. So, the harder that you make it for a criminal to break in, the better it is for yourself. Also, I'm friends with all my neighbors. They all know me, so anytime somebody comes by, they always look out for me. So the harder you make it is, the better it is. But if somebody really wanted to break into my house, they technically could, but it's going to take them forever with alarm systems and all that stuff. By then, cops will come. So it's how you protect your home.
Oh, yeah.
It's where you buy and how you position.
I think, too,
home.
it's like this. If I'm a person that wants to steal,
Yeah.
okay, just, are you going to go to the bad neighborhood?
Have you ever stolen?
No.
I've never stolen.
Not one thing.
You
I got a piece of candy when I was a kid. Man.
Okay, so you stole.
I did.
You stole.
But
So you a liar now.
okay. I'm
That's good shit.
Come on, man. Does that count if you're 7?
No.
Okay, good. All right.
You're good.
I thought if there was like a 10-year-old, and it's like, okay, if you're 10 and older, then it's counted.
No.
But if it's 7, you're walking out, you're like, I want this Kit Kat.
Well, look, as long as you're not over 18, it's not over $500, it becomes a misdemeanor. Okay?
So anyways, I'm going to go to the nice neighborhoods to steal.
That's
so
actually a good point.
the gated communities are not always going to protect that.
Yeah.
And so if I'm going to go somewhere, I'm going to find a way either way as a person out there trying to steal. So I really think it's about, how equipped you are. I mean, does security cameras help? Yes. Obviously, weapons and things, that's your choice.
Yeah.
But I do think it does help, but I don't think it's going to prevent. And I think that's a big thing. So when you look at the big picture of all that, I don't know. To me, like, I live in Southern Highlands, and I don't have a gated community, but the community right next to me has
That's
it.
a nice community, man. How do you like that place?
I love it.
Do you really?
Yeah, I love it. But it's not gated.
Yeah.
But the place right next to me is gated. And we haven't had any break-ins. But honestly, like, if somebody wants to go through, they can just like follow a car in.
Yeah.
It's not like you got security guards like stopping you, and it's
not like Fort Knox.
No, I mean, it's not like, what is it? They have what is that boxer's name? Floyd. Yeah, he's got, like, if you got a gated community where you got guards and stuff, that might be a little different because they got security cameras and they got to check you in. But if it's just a gated community,
yeah, anybody can just follow you.
Yeah, I mean, it's not like it's gonna.
Not only that, what I've noticed with these gated communities, the push button when you hit the number. When a lot of people go through and hit the number, you can actually pull up and you can actually see the number because of the wear and tear. So that's just a quick tip.
Hey, what's up, FaZe J? Want to answer this question. Have you ever sold any houses to celebrities? I know you were at that celebrity party. What was that? Thursday? Where you were like, where was that at? It was up. Where was it? You were at a celebrity party on Thursday.
No.
Right? Oh. You hit 100,000 subscribers.
Now,
and they,
yes.
they start giving you invites to celebrity parties.
The problem is that I just don't go because I deal with people all day long. By the time I'm done, I just want to hang out with just me and my wife and the family.
You're very down to earth, dude. Yes, that's the good thing about you.
Here's the thing. Have I dealt with celebrities? Yes, I have, and I'm still dealing with another celebrity right now, and we hit it off. However, maybe one of these days they could also plug me in. So if you're watching this video,
he wants to be the millionaire real estate agent.
You know what? That's not me, because here's the thing. That's just too bougie. I'm just an average agent doing really well, and it's because of you subscribers out there. But I'm just being real with you. I'm just a real dude, real cat, just showing you how it is, okay?
Yeah. Is there an age requirement on buying a house? I'll answer that question real quick. There is. You have to be 18 and over. Obviously, you got to be an adult.
Mm-hmm.
But there's no like age, like you got to meet a certain age. I mean, there's certain things for like when you're retiring, like if you're doing a reverse mortgage.
Yeah.
Right. Or certain loan programs.
What is that, a reverse mortgage?
It's basically there's 3 different options, but you can take a lump sum or you can take the equity out of your home and basically pay yourself. It's a way for you to really take advantage of your property and get repaid is basically what it is. So, go ahead. It's an FHA loan too, but.
No. I'm just seeing what other comments.
Anyway, she also said that somebody said that they love you lost weight.
Yeah.
Man, somebody's been paying attention. Look at those guns. Dang. Dang. Wow. No, I'll tell you what, man. I did see you the other day, though, and you were kind of gaining some weight, you know, and it's inspiring, dude, because I think you did it in a short window. You're juicing now, right?
Yeah, it only took 30 days, but I'm also hitting the gym too as well. You know, as you get older, obviously, you know, you want to take care of your health. Didn't really care about that, but now it's really a big thing, a big part of my life, and just something that I got to keep going. Matter of fact, after this, I'm about to go hit the gym. Oh,
there you go. If you guys want to find me again, you can find me Loan to Keys on YouTube, my YouTube channel. You can also find me on VegasLoanGuru.com. My company's guaranteed rate. If you go on there and you decide you want to put an application in, great. Make sure you put Chakits on there as a referral because I want to track who's coming from Chakits. Also, us doing these videos, we're gonna try to put these out more often, right?
Yeah, we're probably gonna start doing this every Sunday if the content. If you guys like the content, we'll continue it. Also, if you are just getting started to see what's going on here in the Las Vegas housing market, visit lvhomeexperts.com. It is a great website to get started to see exactly what's going on out here in the housing market. It also shows you everything that's currently available as of today. So I only put properties that are available. So you're going to have over about 10,000 properties to choose from. Also, you'll be able to set up your own search criteria. Also, you'll be able to take a look at the map view, drive around, and kind of do that Google map too as well with this site. It's all integrated. Also, within the site, you have a button to show now. If you want to see a property, go ahead and click show now, or if you have any questions, we have a virtual assistant can actually answer any questions at any time that you choose.
Real quick, what is the deal with age-restricted communities?
Well, you got to be 55 and up.
Mm-hmm.
And talking about age-restricted communities, also depending on the age-restricted communities, some of these communities, what I've heard from the insight, some of these communities, they be getting a little bit bougie, or some communities are...
SIDS and LIDs and what, HOA?
Well, what I've noticed about these age-restricted communities, it's almost like cliques. It's weird. And this is what I'm getting from all the, you know, people that are sold age-restricted to, where they'll move into a neighborhood and they realize it's just too cliquey, okay? And it may not be for you. It's not for everybody for age-restricted. But for me, age-restricted, it seems a little bit too slow. And I don't know, are you going to get into an age restricted at the age of 55? I mean, that's still a little bit too young to be getting into something
well,
like that.
Well, honestly, I'll tell you what, and this
55 is not old.
So
man.
I don't want to like make this like a put down, but I mean, to me, I don't know if I would want to live in a 55 plus community when I'm that age because it's very isolated. Mm-hmm. Does it have perks? Yeah, but I don't want to feel like I'm just going to go there and it's like the end of my days. And I felt that in some of the communities, mm-hmm. maybe not all of them. There is some restrictions.
But man, there's some communities are nice, dude. I look around like, oh, you know what? I could be here.
But I mean, to me, is it something that I desire to have when I'm 55? Maybe, I don't know. That's in 15 years, but I don't know. To me, it's just, I don't know. It's just, I don't want to feel like I'm like left out of something, and I feel like I'd be left out. Like
you wouldn't be left out of anything.
You
going into something?
No, man. I feel like I'm just going there to die. No, I'm just playing.
Oh, that's messed up, man.
I'm just playing.
There ain't nothing wrong with age-restricted communities. There's
No.
a couple of them out there that I do like, and I can see myself. I do personally like the Anthem Country Club area, just due to the fact that the country club.
No, there ain't nothing wrong with them, and I'll tell you, I mean, look, there's some nice ones out there, so I would definitely consider looking at it. You know, when you look at some of these communities, though, don't they have like SIDS, LIDs, HOA payments, and stuff like that?
Well, no, those are more of the those are more of the newer communities, but
Yeah.
the older ones, they're pretty much all paid off. So.
And it's kind of cliquey, like you said. It's really like.
But I think that's pretty much every neighborhood that you go to.
Yeah, I just think there's a little bit more who you know, and we're gonna like, you know, maybe because it's an older community, you know, and they're all kind of camaraderie type thing.
Yeah.
So.
What are your thoughts about on Airbnb? So I'm gonna release a video today on Airbnb, so you can go ahead and watch that vlog, and it kind of tells you about Airbnb and one of the places in Lake Las Vegas where they're doing Airbnb, and they're making a lot of money off of Airbnb. But for me as an investor, I don't want to keep turning rooms, and what I mean by that is you're constantly going out there, you're changing, bed sheets and all that stuff. Then you got to hire somebody.
Dude, it's a full-time job.
It is. Now, if you have one, to me, it's not worth it. But if you have multiple, then it's probably worth it. But that just becomes another business. So
Let me say this: Airbnb, and just my experience. All right, you can qualify. There's different programs and stuff that you can qualify for. Most of the time, you want to buy it as an investment property. Show the income. As long as we see the income, we should be okay. But I want to say one thing about it. Like you said, these people that have them that I know of,
yeah,
it's like a job.
mm-hmm.
They're doing all the work. They're not having somebody go in and change the pillows, or if there's something like one time this lady said, you know, she said this. They came out here. They spent like it was probably like $800.
Mm-hmm.
It was $200 a night, and they only stayed for the weekend. And she has a camera, and they videoed these people in the where they parking in front of the house, really. But they were arguing.
Yeah.
And she saw this. It was like a couple arguing. It was a birthday. Guy got all pissed off, and he broke through the door.
Mm.
And she's got to go in and out, replace the door. It's a mess everywhere. So every time somebody leaves, I mean, is it a return on? Yeah, but it's a headache too. I mean, unless you got like what do people do when they get investment properties? They get a property manager, right? They might have to do that for Airbnb if you have that many properties. I mean, most people have like what, one or two.
Yeah.
I mean, but I hear people like, I'm gonna do 10. I'm like, you're just gonna be not doing nothing, but you're gonna turn into Molly Maid.
Molly Maid is doing pretty good. Well, I mean, we're into this video probably about, how long are we into this video already?
I gotta run though, but
76 minutes. Well, guys, thank you so much for tuning in. If you need more information on Dan, I'll put in the link in the description below with his contact information, and you guys can also reach on out to him. What's the name of that site again?
You can go to VegasLoanGuru.com. You'll see all my information, testimonials, biography there. Also, you can go to Loan to Keys, my YouTube channel, if you'd like. It's just some past videos and stuff I put out. So.
And don't forget to visit lvhomeexperts.com, and don't forget to get the merch, the cash flow, or the CKG group. Don't forget the coffee mug. Support the team. Be a part of the team. Other than that, guys, thank you so much for tuning in, and we are out. All right. Let's stop this thing here.